Morning traders. I'll start at exactly 10:40. It's only 3 minutes away. I'll give people time to join before I start the breakdown. Other than the breakdown, the fundamental side, I think the only risk for this week is the NFP. We have NFP on Friday, non-farm payrolls. The numbers on employment are being keenly watched by the Feds. To understand the function of the Feds, one of them is to provide maximum employment, and the other one is to control interest rates and to bring growth to the economy. So I think how the job number comes out this week could change the trajectory of the Feds, or they could keep holding the same stand they are holding. Other than that, tomorrow we have the Bank of England rate decision. So some emerging markets, we are seeing some hawkish tones. So that means we are seeing rates rising relatively in some of these countries. So that could also mean the major global economies will follow suit. But who knows? Let's wait tomorrow and see. But I don't think we'll see any change from the Bank of England, at least tomorrow. Probably in the next 2 or 3 quarters, then we could have a rate hike. But for now, I still think it's a dovish tone from the central bank. So it's 10:38, 2 more minutes. If you have any question, post it on the chat room. Again, our website will be launched 3 weeks from now. So that's on the 20th of August. If you had dropped us an request for being an intern, so we'll be replying to some of those requests this week very, very soon. We've gotten a couple of requests, so we're now ready to take in some people. We have worked on our end to ensure some things are flowing quite well. So we'll take in about 4 or 5 people to our team. Then we'll be with them. We'll train them on a few things, and hopefully we'll learn 1 or 2 things working alongside us. So being part of the FAB community, we're trying to expand that a bit slowly but surely, I mean. 10:39, a minute to go, and then I will start off officially. So I'll kick off. I'll do a couple of breakdowns. Yesterday I had some very beautiful setups. Some worked out very well. Others worked out very well, but I never really got a good exit. So what instead happened was I ended up breaking even, not losing money or making money. But some of those trades were very good. I still think those are some of the best setups that I had for this week, as much as they didn't pan out as I expected. You can see some bullish momentum in the markets today. So yesterday was quite bearish on some markets. I think oil has gone down almost 5% over the last 2 days. But today we are up almost a percentage. Gold, we're still sitting at the 1800 level. I was looking at gold from a top-down perspective. I think it's very interesting. I think there's a very good move that is about to pop on gold. That's what I'm watching. That's what I'm really keeping a track on. Over the next few months, you could see gold really rise. And I'll share with you why I think that's the case. So it's exactly 10:40. And I will now share my screen and start off the analysis. Yep, so a little bit change. Sometimes when you're trading, it's always nice to keep on changing your charts, updating your charts. If you enjoy doing your chart breakdowns like I do, it's always important to keep on juggling up with colors, changing, filling up different light, different markets, and then you can be able to at least test again if you still have the same insights, same patterns you're watching, same levels. Like, it just means you're updating your view in the markets. Let me look at gold from a weekly chart perspective. I think there's something quite interesting here. So this is gold on the weekly chart. So we had the first bounce, second bounce, and the third bounce. But the third bounce happened to coincide with a flag formation, or rather what many people call a flag correction. And it took us back down all the way to about 1675, 1700, which was a key psychological level. Last year, when the Feds decided to pump in trillions of money into the economy, we saw gold move from about 1700, a direct rally to about 2000. You can see no correction was evident on this market. We had just a straight leg up all the way for about 6, 7, 8 weeks. I think we had a move all the way from 1700 to 2000. Anyone who was trying to sell at this point got killed. The same could happen this year. Now, this is what happened. So we had this flag formation, we had a breakout and some bullish momentum taking us higher. And then we had a very beautiful retest on the weekly chart again. And over the last few weeks, we've been trading at the 1800, 1840 level. So what am I looking for me to start buying gold aggressively? I'm already buying some gold. I have some long-term positions that I hold. I execute them in a very different way. I buy some stocks which participate in this industry. I think I learned that from just knowing how to diversify some of the markets that you're trading, or to diversify your account. You can have different holdings in percentages in different places, trying to time different moves. Anyway, looking at gold from a weekly perspective, for me, a break of 1900 from a weekly chart could mean the beginning of a bull move 1 to 2000, and I don't think we'll just hit 2000, 2050. There's a high chance the first target, which will be quite hard to break, will be the 2200 level. From where we're currently trading, that's about 4000 pips if you're trading on the long term. You can also choose to execute a long-term position. I don't see any harm in that, by the way. Unlike what many people think, sometimes you have to break your rules. I think knowing when to break your rules is as important as knowing when to follow your rules. So let me just change this a bit. So you can take a long-term position. I think, okay, I don't know why it keeps bringing me back to that. You can have your trade setup changed a bit, because the risk reward here is quite beautiful. I think if you're just targeting that level, and my stop loss is quite tight, I wouldn't have a very extensive stop loss. Instead, I'd have a very tight stop. My stop loss will come in at about the 1750 level, and I'd be looking for the 2200 level. That's my target. That's what I'd be looking for. That's a long trade. You can execute it in that way. Some people will choose to do it that way, but you can also decide to play your game, get in and out, observe patterns, try as much as possible to be betting on the long side. Don't be caught on the wrong side of the market. And that could also work. So what am I watching? I think there's a high chance this market will just rest above 1800, and we could see this move first of all to 1875. In some extreme cases, we could even see a break of 1875 and a rally to 1900 before the end of this month. That's a trade for the month. I think that's where gold will be trading before the end of this month. On the 4-hour chart, there's this beautiful, more of a trend line formation. Depending on how you draw this trend line, you'll get different formations. So you really need to be careful again about how you draw some of these things. And that's why I think you need to practice your skill, do a lot of back testing, and improve your chart breakdowns, because this will give you a different outlook in the markets. Clearly, you can see without me changing the levels of the trend line, I'd still think we have not yet bounced off. But with me just doing some slight adjustments, it looks like we've bounced off. Again, we could see a rally from this point to 1850 before the end of this week. Just using a normal Fibonacci correction, I think it's right for us to assume that this market has corrected to the 61.8 fib extension. And looking for 27.2 will take me to 1843, 1845. That's a hanging level. I want 1850 to be my target. So that's the target that I think ultimately this market will trade as high as 1850. This is one of the best setups that I'm watching currently. If you execute this long position with your stops coming in at the 1800 level, 1805 level, I think you have the opportunity to make, can see momentum picking up in most markets. So yeah, with my stops actually at 1800, 1797, which is quite wide, you can see clearly I have the opportunity to bank in about 400 points, and momentum is picking up. So we are 1 hour into London session. You can see it looks like the bulls have it, the bears don't have it in this case. We had this collapse. You can see the momentum. Just look at the candlestick formation. I think this is enough momentum pointing to the upside. Yeah, we're getting some downside, but you can see there isn't much momentum to the downside. I think the odds are now tipped to the upside. So that's one of the trades that I'm really keen on. I'm already on that one. I'm looking for that move to 1852. That's the next upside target. Next, I look at oil. Oil is quite interesting. So this is one market which for now it's very hard to trade it, but the momentum looks like it's offering very many opportunities for you to trade. There are two ways to think about this market. One, we've gotten a third bounce of this trend line, and we could be heading for new highs at the $80 a barrel level, probably even $85 a barrel level, depending on how the pivots for this month have aligned. But again, you can also think of the flip side or the downside. I think there are very many fundamentals coming in supporting the bear side of this market. And if I just look at it, you see this looks like a 78.6 fib retracement, and that means you could see a move again to the downside. Now, currently we're trading at the fair value area. So what am I watching? I'm just watching to see if markets will still remain at this level. We'll have a breakout. I'm not really certain. I'm just watching $75 a barrel. Last week, I think yesterday we had a very good position at this level, 69.2. I think you could buy this looking for 71.5. There was a high chance that would play out very well, and I think that will actually happen. If I just use the 4-hour again, fib retracement, this is a retracement to 61.8. And if we get the extended move to the upside again, we could be looking for 76.5. That could mean again the formation of a new channel, the formation of a new pattern coming in at this market. So if I just extrapolate it like that, yeah, it looks like we could see a move to these levels. But there are very many uncertainties in this market, so you really have to think about how to position yourself when you're trading this market. For me, I don't have any setup currently on oil. I'm just watching. Next, I look at GBP USD. I think the bulls have it. If we just look at it from the weekly perspective, clearly you can see this is the beginning of another move to the upside. I think this time we could see 1.45. We could even see a break of 1.45 and a rally to 1.51, 1.50. There's a lot of momentum coming on this market to the upside. The daily chart, this is the formation. So if you think about it, this looks like more of a ranging market from a big picture perspective, because you could just mark these two levels and you get a very distinctive ranging market. So you can see clearly 1.4250 and the 1.375037 level. This looked like a break, but it was not really a break. It was just more of a slide low and a move quickly back to the upside. So I think there's a high chance if we move above 1.4, we'll see a rally to 1.4250 before the end of this month. That's also a setup that I'm watching. I think there's a high chance markets could rally all the way to this level before breaking back to 1.45 if we get a break of the 1.4250 and a move to create new highs. On the 4-hour chart, there isn't a pattern, but on the hourly chart, I remember yesterday when we were looking at markets with one of our clients, we got a very beautiful setup here, I think, on the hourly chart, and it was a bounce, that trend line bounce, I think, which was in line with this. Yeah, so you can see clearly this was a perfect entry. Now it looks like markets are rallying higher. I think there's a high chance you could see new highs before the end of this week. And if I was just to extrapolate that with this trend line, then I'll be looking for 1.450, 1.4041, probably 405, 4060. From where we're currently trading, that's 100 pips, but you really have to think hard about where to place your stop loss. So you can decide whether to execute that position depending on how far you place your stop loss. Next, I'll look at Euro Yen. So Euro Yen is quite interesting. On the 4-hour chart, looks like we have a mixed signal, but let me just look at it. On the daily chart, first of all, this month we opened and you can see we started moving lower. So I was looking for a move back to 127.5, a bounce of a certain trend line that I had on the long-term picture. So if I just draw this, you'll discover that we have a certain pattern that we're watching here. A certain pattern that we are watching on this market. So yep, so this is the move. I think bounce 1, bounce 2, and now we could see this move. So I was looking for this move to the downside, 126, 127, and it looked like it was in perfect line, this descending trend line to the downside. So you can see the first bounce, second bounce, third bounce, a lot of momentum to the downside. I'm not very certain whether to still hold this setup, because if I just look at the correlations, there's a high chance this market will rally to the upside, and this could just be a correction to 61.8, and then we could see a rally to 131.5, a break of 130.5, which is the central pivot level, and a rally to 131.5. especially if momentum keeps on moving higher. So for some of these trades, you really have to think about the risk-reward ratio. I think that's one of the things you have to do. So if I just think about the risk-reward ratio in this trade, if I was to execute this position at that level, with my targets coming in at this level, it's a risk-reward ratio of about 1:2. Not very attractive for me to bet on a very low probability trade. If it was a 1:4, 1:5, I think I'd take it, but I never knew it was not that attractive, so I'll pass that one, as much as I think markets will be heading to that direction. The Dow has been quite volatile. This is one of the positions I had. I was looking for a move to 650, missed my target by about, I think, 75 points. So we got to 718. I was looking for 650 for my shots. I'd executed my shot from about 35,200, a very beautiful trade. Unfortunately, I had to exit this trade at break-even and had made some very good money. But looking at it from a daily chart perspective, I think there's a high chance the Dow could rally again to 36,000. The momentum that came back into the markets yesterday on the bullish side could mean a break of this level, 35,200, and a rally to 36,000. In some extreme cases, you could even see 37,000, 38,000, all the way to 40,000, which is the next upside target, using the big picture perspective or looking at markets from a top-down perspective. Because if I just go back down to the daily chart, I think it's very clear that this was a flag formation and a retest. You can see this was a bounce, a move to the downside. So this was a move, a correction. And if I was just to look at, again, using the Fibonacci tool, I think some of these trades are basic trades. You just have to be aware, and you really have to think about where markets are going to the long term. So if I just use that, I think it's quite clear that this market's going to touch 36,000, 36,250. I think there's a clear path to 36,250, the formation of two new highs in this market. If I go down to the 4-hour chart, last week we had a long consolidation. This week we started the week with a quick drop to the downside. Now it looks like we're back again into this consolidation. I think a break of this level at 5,150 will spark you to risk some money looking for these markets to keep rising. And I think break to 36,000, 35,500 would be a first target. 36,000 could be a second target to the upside. 35,750 could again be your target. If you're watching markets, I think one thing I've learned is, but now this one I think applies to the people who understand the quarterly levels, there's a high chance markets will respect some of those levels. So for example, if I was keen yesterday, the psychological level in this market was 750, not 650. Unfortunately, I was not very keen on such details. And if I was just keen on that detail, you discover that this market respected 750 pretty well and went back higher, especially if I just go down to the hourly chart. You can see clearly we had a drop to 750, quick one, and then a move back higher with a lot of momentum. So you really have to be keen on how you look at markets and be attentive to detail when you're trading markets. The last one that I look at is GBP/AUD. I think on Monday we shared a very beautiful setup on GBP/AUD. We talked about a probable move to 1.8750, playing out very well. On the 4-hour chart, I actually had this setup. I was looking for a move back all the way to this level. It looks like markets will ultimately visit that level. So I think I'll stop there. If you have any question, you can answer. If you don't have a question, I think I will close my session today at that point, not having anything else to say, at least for today. So those are some of the markets I'm watching. That's the outlook on most of the markets that I'm watching. And I think I'll stop there. Any question, I'll answer. If there's no question, I'll see you guys next time on Friday, I think. So someone is asking, how often do you backtest? Once you backtest once, I think when you're doing your backtesting, what you really need to pay attention to is some few details. One is your hit rate. So how many times are you right? How many times are you wrong? 2 is your pattern occurrence frequency. So how many times will your pattern pop in when you're trading? 3 is the risk-reward ratio, the average risk-reward ratio. 4 is which patterns are you backtesting. 5 is which market conditions work best for you. If you have clear set answers to some of these questions, then you can keep on trading. I think there's a high chance, and I've observed this over the years, that history repeats itself. As much as it doesn't repeat itself exactly, there's a very good rhythm in looking at historical prices and looking at how markets behave in the past. and having clear answers to some of these questions. So I don't do back tests often. I did my back test some time ago. Now the only thing that I do is probably if I've observed something that looks quite interesting, I've observed it over time and I don't have clear data, then I can back test it again to just get some clear data on how a certain setup will have performed, or a certain thing that I'm thinking about, probably maybe how would scaling in at a certain point in a certain pattern perform over the last 20, 15, 30 years. So that's what I normally look at when I'm doing the back tests. So nothing much. I don't do back tests often. So that's it. I think I'll stop there. We'll see you guys next time. Peace.